The broadcast is now starting. All attendees are in listen-only mode.
Hi, good afternoon. This is Manoj Abhichandani, and I will be presenting today on my own. Before I start, just want to make sure that you can hear me well. I'm requesting if one of you can just enter in the question box that you can hear me. Okay. Thank you very much. Yeah, I have confirmation that uh, you can hear me well. Today I'm going to talk about SMSF auditing process, and today's presentation could be very useful to trustees who work, in self-managed, helping their accountants to manage their funds, and it can help SMSF administrators and accountants as well, because they should know what the auditors are looking at and ensure that they provide the audit evidence as they require. And mostly today's presentation is targeted towards Superfund auditors, so that those who are not up to the mark can follow some of the cues which I would be talking about, and then ensure that they're doing a proper audit and are staying clear of all tax office questions. Right, so let's get on with it. As far as the copy of the presentation is concerned, I would be uploading it later on after the presentation, and this webinar goes on demand on SMSF School, and you will be able to download this presentation. The reason for doing that is because I have some questions which I would be asking you via menti.com. So you will also get the results of what other people have to say, what comments other people have made in the presentation. Now, there is a phone number in your panel, so if you can't hear me for some reason, you can dial that number and enter a PIN, and then I will be quite audible. Now, in your panel, we have provided you a question box. If for any reason anything I say or any presentation item or any statements on the presentation you do not agree with and you want further clarification, please do enter it, and at the end of the presentation I'll try and attempt answering them. Right, so as with my presentation, I like to teach with the whiteboard kind of thing attitude. I'd like some feedback, and this is the way we can all enjoy the learning process, and this way you can be away from whatever you're doing and participate in some practical manner. Those who have attended my presentations earlier know what to do. If you have two screens, you can log into menti.com, or if you have a mobile phone, you can simply scan the QR code which is on your screen. And when you are about to join, it'll ask you for a code, which is 13783163. And once you are logged in, if you can see on the bottom right hand corner, I can see that 5 of you have logged in. If you can just put a thumb mark there, that will really be appreciated, so that I know that you are logged in. All right, so I can see that more of you have logged in. I'll just stay on the screen so that you can scan the QR code. I will be talking about this QR code later as well, but if you want to have some fun today with me, I'll appreciate if you can um, participate with me. I think I mentioned earlier, as far as or it was in the part of the notes, that if you participate, you do get the CPD certificate, and if you don't, then you don't get the full CPD. So participation is now important and necessary for you to get a CPD certificate. So just make sure that you log in. It's very easy to log in. Just go to www.menti.com and say you want to participate in a presentation and enter the code 13783163. Okay, so let's get going. Some of you have attended my presentation earlier. This is a little bio about me. I've been in the SMSF space since 1988, and I love the education part of it, which I'm currently involved in more than earlier. Right. Now, today's discussion is on the audit process, on what the auditor has to do, and why it is necessary that he should have his process lined up, and what are the steps involved in proper audit, and what processes he needs to go into. Basically, there are four items that an auditor needs to tick off to ensure that his auditing process are as per the Australian auditing standards. First is that he has to obtain sufficient and appropriate audit evidence so that he can form an audit opinion. And then he has to decide if there are any risky items in the financial statements. He has to collect more audit evidence and sometimes third party audit evidences, which I'm going to discuss very soon. And what are those third party audit evidences? And then he has to also look at whether the fund will carry on as a going concern in the following years or not, and whether after the financial year end, if there are any events which would be so significant that it would require the financial statements to be either amended, or like COVID came in, whether there is an item which needs to be noted in the financial notes and it is not there. So those are the decisions what the auditor needs to ensure, so that the financial reports he is commenting on, he's passing judgment, are fair and reasonable. Now, verification of audit evidences is very important because, as we know, the trustees will gather up all the information and provide it to their accountant or administrator, who will either Dropbox or email or upload for the auditor. And then once we have evaluated those audit evidence and compared it to the financial report, we have to document that we are either happy, not happy, or we have certain comments which we need to make, and whether the fund complies with the SIS Act and SIS regulations, and whether any of the audit evidence is sufficient, that is, the quantity of the evidence, is it sufficient for them to make judgment on the financial reports, whether they are correct and they are a fair representations of all the transactions which the fund conducted during the year. Now, many a times I get an opportunity to look at the document which the ATO sends to the auditor before they refer them to ASIC for deregistrations. And many times I notice that although the auditor has conducted an audit or is claiming that they have conducted an audit, but they are not able to prove that they have an audit working papers file and whether they have documented their audit findings or not. And I'm going to talk a little bit about that as well. Now, the process is very simple. Most of the work which the auditors do, it's basically obtaining the audit evidence and evaluating the audit evidence. So, for example, if there is, say, dividend income in the financial statements, so the job of the auditor would be is to look at the dividend statements supplied by the listed companies and then evaluating them. That means you would be totaling them, inspecting them, observing them, confirming them from the because you may be looking at a PDF file, so you can easily log into the listed company's website to verify or reconfirm whether the amount of dividend was exactly the one which you are looking at. And these are all analytical procedures which the auditor should follow. And once he is collected, he has to look at the appropriateness of that document. And if he's not qualified enough, so let's say there could be a property and there is a value in the financial statements, then the audit evidence could be maybe a declaration on the value. And if he's not happy with the valuation, then he can ask for addition to his audit procedure to resolve any discrepancies which he may have in his mind, or request the accountant and the trustee to send further information so that he can have further relevance and reliability on the information which has been provided so that he can pass some judgment on it. Now, there is nowhere in the auditing standards that he must check each and every income or asset or liability or expense of the fund. The auditor needs to design a test control system where he has to document on how he has selected the items which he is testing. So let's say the fund has got 30 shares, and let's say they are all listed companies, and all of them have paid dividends twice in a year. So it is not the auditor's job to see 60 dividend statements. He has to, however, design a test and document how he designed his test. So if he chooses, he can say 10%, or if he's happy, he's audited the fund before, he's happy with the risk profile of the client, and which we discussed in my previous presentation. He can go for a 10%, or he can go for high value ones, or he can perhaps also look at, if not all 60, maybe 15, one, the first dividend, and the second company, the second dividend of the fund. So he can look at all of those things, but he is not required to look at each and every item which remains in the which is in the financial statements. Now, I'm requesting those who have logged in a little bit late. Um, we are going to have some fun here. And I've received a comment that you can't hear anything. Just want to make sure that all of you are able to hear me well. Could someone just put it in the question box? Okay, okay, I've got all good. Okay, thank you so much. Yeah. Those who are not able to hear me, please look into your panel. You will see there is a section for audio. You need to ring that number with the pin code, and you will be able to hear me well. We're going to have some fun here. So, if you want to join in and if you are here for a CPD certificate, just want to tell you that certificates will be issued to those who participate. So, you can scan the QR code on your mobile and you can participate with your mobile. But if you have two screens, you can log into menti.com on the other screen and enter the code, and we can have some fun together. So the code is 13783163. Right, so let's move on. How to obtain reliable and quality audit evidence so that we can pass judgment on it. We will also look at what the Australian auditing standard talks about it. But what is very important is the auditing standard is 500, and it has been recompiled many a times, and we're going to talk about that in the next slide. But the auditor needs to be very sure that he's collecting enough evidence, and that evidence can come through directly from the trustees or the auditor, as we usually get them. But after we get the audit evidence, it may not be appropriate in the form it comes in. By that I mean that you might get 60 dividend statements. That's not the end of it. So what you need to do is you need to do your own calculation. You need to put them together. And I know some of the softwares would have their own totaling methods and may give you details. But then the auditing standard requires you to check yourself before you come to any audit conclusion that the audit evidence which has been provided to you is appropriate or not. And in some cases, you may need to look at contributions, for examples, if they are made by a member whose balance is less than 500. There could be catch up contributions, concessional contributions. So you need to probably, ask the accountant to go to the ATO portal and provide to you further information to check whether sufficient contributions were made in the previous year or not. Otherwise, the concessional contribution in the current year could be above the cap amount. The same thing goes for bring forward contributions. Maybe it is a new fund, or maybe the a member contributed 2 years back and did not contribute anything non-concessional, and this year he has contributed above the cap amount. So you need to make further tests and checks and make sure that the concessional and non-concessional contribution, for example, on the income side uh, has been properly evidenced or not. So in this case, you will have to ask the auditor to give you the for non-concessional contributions the previous 2 years financials, because you may not have audited the fund before. So these audit procedures, including checking of the tax calculation, becomes a part of your audit process. And in many cases, you may get from the trustees only the PDF file and not the original bank statements. And it is quite possible that the trustee may not have original bank statements. The other day, I received an email from the Commonwealth Bank, and they are doing away with paper bank statements, and they want to just send me an email or a PDF file of my bank statement and an online version of the bank statement. So, as technology advances, our auditing processes should also advance in the same manner. Now, the auditing standard 500, which is operative from 15th of December, it talks about when the auditor commences his audit, it is his responsibility to design the audit procedure, and you cannot basically design and perform the audit procedure till you have seen the quality and the quantity of the audit evidence which has been provided to you. So the first thing is you need to collect all the audit evidence and check whether they are appropriate or not. And sometimes, what you get will always not be enough, and you will have to then prepare a list for the accountant again. And sometimes I've get a lot of grievances from accountants that the auditor doesn't make one list. They, keep on asking things, and I can understand the auditor's viewpoint that you ask something and then based on what you receive, you have to sometimes go back to the accountant and ask further things because what they have provided is not appropriate. So the quality of the audit evidence is the appropriateness which the standard talks about. Now, because we are going to arrive at conclusions, we must also document those conclusions, and we have to measure the quantity, whether the information which has been provided is enough or not. Sometimes we may have to go to external, people to understand a little bit more. Like I mentioned, that look at the company's website whether that dividend has been declared or not. And some of the share registries, if you have the HIN number, you can actually log in and verify whether the asset is still held by that super fund or not. But just to ensure the auditing standard forces upon us that before any auditing procedures start and before you start designing the audit procedures, you must look at the evidences which are in front of you, and based on that, you know, you make conclusions. Now, if you can look into your Menti now, I just want to know if you receive bank statements, and this is which you have to choose out of so many three options which I have given to you. Which one will you accept? So some auditors would go for originals only, and I believe that those gone are those days where we could get originals, because it's very rare that a self-managed super fund would have any original documents for us. Um, just getting a PDF document without the trustee rep letter, representation letter to say that the PDF file is a true representation is also not enough. So PDF file without mention of it in the trustee rep letter should also not do the job as far as the tax office is concerned. Okay, thank you very much. And if you enjoyed this type of learning process, I will appreciate a thumbs up. And we have quite a few of these slides coming up. and hopefully we can enjoy our learning process. We grow and we learn, as we say. Right. So another one is ownership of listed shares. What audit evidence is sufficient and appropriate? And the options here are I check the share registry. And how many of you do that? Because to do that, and recently in online SMSF audit, if you enter the HIN number of the fund, we actually, with one click, take you to the share registry. And if you haven't used that function, I invite you to do that. And that will actually take you to the share registry because that is a conclusive proof that you have checked it. Now, if if you are wondering what you're doing, if you've joined us late and you don't know what's happening, this is an interactive learning webinar. So you can go to menti.com and you can log in with your phone and you can participate with us. And the code to use is 137836163. Now, a lot of you have said that you are happy with ComSec broker statements, and I have a problem with that. And I don't know whether you have heard the story of Melissa Caddick. What she did was that she basically had one fund where she had so many shares. And then she uh, copied that ComSec statement because all the funds she used to a financial planner looking after monies of self-managed super fund, and she was basically committing a fraud, stealing their money. But she was getting the funds audited, and everybody wondered how come the auditors never picked it up. And the reason why the auditors never picked it up is because she had a ComSec broker statement for one fund. And then with the PDF writer, she would change the name of the fund. And because every fund had the same shares, number of shares, they thought, and she used four different auditors, they thought that this fund still continues to own those listed shares, whereas those funds never owned those shares. And they were basically relying on the PDF document and the ComSec broker statements. So, 23 of you, can you please change the way you audit now? This is not a conclusive proof. You cannot rely on what has been provided to you. And there is a Verser case which I noticed where the auditor is being referred by the ATO to ASIC for deregistration. What the auditor did, I think the system Menti will allow you to change your mind. So if you want, you can still change it to I check share registry, because if you're looking at statements which I think is wrong. So, what happened in this case is that this auditor just looked at the BGL or class investment portfolio, and they were claiming, or class or BGL or Supermate were claiming that this is the exact replica of the shares which you own. So ComSec is some kind of reliability, but if you just only rely on the set of accounts, then I believe you are really on thin ice. And I think some trustees can make a fool of you as an auditor. So just be very, very careful that you actually need to go to the share registry. You don't have to go for all the shares. If the fund owns 30 shares, you can check maybe one or two shares for each share registry, and that will be done. Okay, so let's just move on and checking property ownership. I do the following. I do my own title search every year, or do you check the title deeds supplied by the trustee? Or since I have audited the fund last year, I do not stress too much about who owns the property because I checked it last year and I'm quite happy with that. So I'll let you just let you think about it. I'll just put a 30 seconds timer for me to record. And all right, now those of you who have said that I have audited the fund last year, I do not stress too much. Let me just tell you that if the property has been sold and the money has been pocketed by the trustee, there is no way you can find out whether the asset is still owned by the super fund. So that's that. And I can see that not many of you do that, but I can see, and I'm very happy that most of you actually do your own title search each year. Because if you check the title deed supplied by the trustee again, that's a PDF document and that can be open for manipulation and fraud. So the ideal thing to do is to do your own title search, and this could be a part of your disbursement. So if the fund owns property, you have to tell the accountant and the trustee that you would be conducting the search at the time of your audit, not on 30th of June, so that you are sure that the asset continues to be held by the super fund. So that's the correct way. Again, I have picked up only those items and those pain points where I have seen auditors getting caught with the tax office and where you can get into trouble with the tax office. So just be very careful. Conducting your own would be the right thing to do. Now, cryptocurrency is a little bit dicey, so I want you to type in your comments. So if you're auditing a fund with cryptocurrency, I'm very particular about the following. So I don't know whether you have audited a fund which had cryptocurrency or not. Uh, that's good. No experience in this. I know a lot of auditors just say that if I see a fund with cryptocurrency, I basically resign as an auditor because cryptocurrency can be very complicated. And there are some auditors who specialize in cryptocurrencies and they, in the process, are able to charge a little bit more. All right, so I'm getting some positive responses. Okay, ownership of record, very difficult to verify. Holding valuation is stored. No experience in this. So, yeah. So we all over the place. As you can see that some of you will do a Part A qualifications, and this can be a little bit tricky. So just be careful. I think, and there's a problem on who owns the cryptos. And very recently, the tax office also came up with some information that the auditor needs to be extra careful on the ownership of cryptocurrency. So we need to be very, very careful. As you can see, quite a few will not accept the assignment. So it could be very, very dicey. So a lot of people are not interested at all for auditing funds who have cryptocurrency. All right. So Yes, investment strategy, all of those things are very important, but I'm more interested in the verification of whether the fund actually owns that asset or not. Okay, let's just move on to the second issue, where we need more supporting evidence, and usually we need more supporting evidences where the asset is of high value and there is a higher risk of a misstatement in the financial report. And things could be like subsequent events, and the auditing standard 560 and 570 are quite important here. And in this case, it's very important that the auditor directly gets that information. Like we talked about title searches, it's a high risk item. So we should get it from the independent source, and we should not rely on the accounting software or any trustee declaration. So we should not let these kind of evidences pass through other parties. You should obtain them directly from the source instead of getting trustees and accountants involved, so that you are 100% in control and you know that you are getting this information correctly. Now, as far as subsequent events are concerned, there are two types of items which you should be worried about. First is whether you need to get the financial statements adjusted. You're not happy. And this can happen. Let's say there is a syndicate where the super fund invested, a property syndicate, and the current valuation is substantially higher or lower. And by substantial, I mean material. And material depends on the size of the fund, on the value of the member. And then if it is quite different, then you can request the financial statements to reflect the new value so that the member balances are correct. However, there could be some insignificant items. There could be 5% or 10% drop in the listed shares, which is quite common. And I think for that, you can request the accountants to just mention it in the notes. Now, as far as going concern is concerned, we have to be very careful, because there are many funds which may have not complied with SIS Act and SIS regulation. And it's quite possible that the tax office may wind up the fund. And one of those instances could be, let's say, the trustees have some naked calls, they have put and call options. So the market can fluctuate to an extent where the 100% balance of the fund can be totally wiped off, and it could be possible that the fund may not exist in the following year. So whenever you have these doubts, you should make some analytical procedures to make sure. And I'm going to talk about those analytical procedures which we must follow, so that these non-compliance or these existings of the fund contained are in your report, and at least you reflect your doubts in your management letter and alert the trustees of the issues. And even cryptocurrencies, for example, as you said, that if you see a fund, you can always comment on it. You don't have to say that I'm going to resign. What you can do is comment on part A and say that, look, and in the management letter, you can alert them that, look, I don't know how you can even have an audit report where you withdraw commenting on the asset. So, you have commented on everything else, but not on one particular item. So refusing such audits may not be the right thing to do, but probably educating yourself and trying to understand how that technology works will also be helpful. So by using Menti, we will try and understand a little bit more on auditors' behavior. So let's say you are about to issue an audit report for a single member fund and the member is 75 years old. Now, I would like you to strongly disagree or strongly agree with my three statements. And my first statement is I'll phone the accountant. So this could be, let's say last week, you completed an audit of 2023, and it's almost like 11 months after the financial records have been completed, so you will phone the accountant to check if the member is fit and alive. I think it's important because 11 months have passed, so it's quite possible that the member may be dead by now. I mean, it's quite possible 75-year-old dying in 11 months after they signed their financial statements. Some of you, will you phone your accountant or will you phone the member? Because with a 75-year-old, it's quite possible that he may have dementia and he may not be able to manage the fund more. I can see that you disagree that I will issue the audit report without contacting the member or the accountant. So that's the bottommost one. And most of you are inclined to check with the accountant, whether, the member is still going okay. I love to talk to trustees, and this is what the tax office wants, and this is what ASIC wants as well. And once you've spoken to the trustee, you can make your audit note and say, I spoke to the trustee, I phoned this number, there is a record that, your phoned his number. And I think that's a good thing, just having a very good relationship. And tax office is actually targeting those auditors who actually on their website claim that we don't speak to your clients. That's a wrong thing. An auditor's job is to actually speak to the trustee to make sure that he is aware of who the auditor is and the auditor is doing something for him. So this communication is a good thing, I will say. All right. I hope you're enjoying working with Menti, and if you are, couple of thumbs up would be good for me. Some heart signs will be good, so that this collaborative learning is also going to give me some encouragement in the future. So let's say this is a question on a subsequent event. AMP listed shares have dropped from $3 to $1 on audit report date. Will you request the trustee? And the first one, you have to choose out of the three, request the accounts to be amended. Sorry, I apologize. Request the accounts to be amended if the shareholding is substantial. And the second choice is do nothing as I'm auditing financials of 30th of June. Or the second option or the third option you have is the notes to the account will be sufficient irrespective of amount of investment. All right, so I believe you know which side I'm heading. So it all depends on materiality. If he's got 100 shares, it's only $200 difference in a $2 million fund. You'll probably do nothing. But if it is say 200,000 out of $2 million fund, you'll probably request the accounts to be amended. And if it is $20,000 thing, you will probably ask the accountant to probably just show it in a notes to the accounts that at the time of the audit, the fund. So it's all a material thing. So it depends on how much of the asset of the fund is affected. Okay, so that means we have to assess the risk of misstatement, and materiality comes a lot into this. And materiality can be judged depending on how you look at each and every investment of the fund and the member balances. And please, if you look into SMSF school, there are some events which I am conducting later in the year, and I'm going to talk about how to judge higher risk and how to check materiality in a fund. So just watch out for those webinars, and if there you will get covered. Look, all these events are in SMSF audit. You will be able to claim of your CPD hours. And just a reminder that you need at least 8 hours out of the annual 20 hours, which must be if you're an auditor in SMSF audit. And I have decided that only those people who participate in the Menti will get these certificates. Otherwise, you will just get a certificate of attendance of normal CPD, but a certificate for those 8 hours in audit will only be given to those people who participate and join in the learning process. Okay, so the higher risk assessment is how to verify the asset. How will you verify, say, physical verification that it actually existed? And sometimes, like, some funds have a car, vintage car, or some may have paintings. So you need certain certificates, as they cannot be stored at the trustee's home. So you would rely on those kind of declarations by third parties, and the third parties must write to you directly. You don't want them to write to the trustees and you use that. You need to get it directly from them. As far as valuations are concerned, property valuation, whether you will accept a trustee valuation or a third party valuation, and if there are any related party transactions, we need to assess the risk, because here we are either borrowing or selling or buying from a related party. So we need to be very, very careful. We need to be of a suspicious mind and check everything thoroughly, or you can say more thoroughly, whenever there is a related party dealing with the super fund. Now, original over PDF, we discussed that as long as it's covered by the trustee representation letter, it should be fine. But as far as the checking of work is concerned, we should not trust the software to total all the dividends, for example, or to total all the imputation credit, or to total the income tax, or whether the valuation is unlisted managed fund. So it's a good idea to actually ring them, and I've done that many times. It was an investment in a trust. It's in a syndicate. There was a phone number which was provided. I actually called them up and I wanted to know where the property is, when was it bought, and why is the valuation what it is, because it was showing at cost. And I wanted to and I told them that I had a letter of introduction from the accountant. I had my engagement letter to prove of who I was, and the other side were very helpful. to provide me the information, and I was making notes as I was talking to them. So these are the things which are going to protect your license when the ATO comes knocking at your door. So, a phone call to unlisted managed funds is a fantastic idea. Okay, you have to verify, when there is a liability in the fund, whether there are loans from related parties, and whether there's any interest being paid correctly or not. And I have a very good question for you. Now, those of you who want the CPD certificate for audit, the valuable CPD 8 hours which you need, please log into Menti and use the code 13783163, and I get a report from Menti. If you have participated in Menti, your CPD certificate will clearly say that that it was in audit. Okay, so you're auditing a fund where it's 66%, and I've put a dollar value, 1.2 million of the fund assets is in unlisted management funds. What is appropriate and sufficient audit evidences? So what is appropriate and sufficient evidence? And I'm asking for what you will get from the unlisted managed fund. What will you get from them? And audited financial statements. So let's say if you get unaudited financial statements, what would you do? Would you be lodging a Part A uh, audit report comment? You would want some independent qualifications, and you'll want some verification whether the assets and liabilities are there or not. And you'll call up the owners to, the managers to find out a little bit more. And some of you have written that you will just make a audit report comment on the valuation. I think that's a little bit going too far without, checking a little bit more, of the fund, whether there could be quite okay, legitimate funds, but, just willy-nilly just making an audit remark would also not be right for you to do, because after all, if there is a qualified audit report, the trustees can get alerted by the tax office, and there is a fear that they can actually be disqualified as trustees. All right, so I have another question. The fund has a related party borrowing for a shop where they run a hairdressing business. So will you check if the interest rate each year is as per PCG 2016/5? Now, just a reminder that in May every year, and I think last year was 8.85. I stand to be corrected, but now I think it is for the next year from 1st of July, it is 9.35. So you are saying that you will check interest year whether the higher interest is being charged or not. Now, let me just tell you one thing. It all depends on the loan documents, because the loan documents, I mean, if it is 4 years old or 5 years old, if it is variable, then you must charge the interest rate every year, but it could be even fixed interest rate. So if it is a fixed interest, then obviously you have to check the documents first and make sure that if it was a 5 year fixed interest rate, then the interest doesn't change from 1 year to another year. There's something which you need to look at, and you can't go back and change those documents because you have audited in the previous years. So this is something you need to check whether commercial rates are being charged, whether the rate which is suggested by the PCG, which comes out every year in May. Every year we get our mouse mat changed, with these new rates, and we've just ordered them. And if you want a new mouse mat with a new rate, the best part about the mouse mat is it sits on your table. You don't have to, look for this particular information. Saves you a lot of time. Okay, step three, external verification is very important, and it is only done when the information which is on hand is not substantial and it's not appropriate, and it is required of you that you go out and get that information. So let's say there is a bank account, you've been provided a loan accounts by LRBA, so you will ask for bank statements, and spreadsheets are not okay, and we've gone through it. They manage funds and real estate agents, they owe you rent, or there are some custodians like they're owning properties on behalf of the super fund. There could be properties overseas, for example. There could be wine, bullion, cars, paintings, which is being held by other parties and not by the super fund trustees. So you would need all those confirmations from these outside parties whether everything is on right or not. Now, gold bullion is a very funny one. So you're auditing a fund and it owns gold bullion. I think it's a legitimate, and in today's world, a very sensible investment with interest rates going up so high. What would you do? This is the question, and I'm quite wary about my time, so I'm going to give you 30 seconds to answer this on how would you do this. Now, I must say that gold bullion is one asset which is not a personal use asset, so gold can be held by the trustees in their own home. Okay. All right, photo of bullion on today's newspaper. Yeah, so this is the one which I like the most. And what happens on this is this is really a very good one. So what I would do is I'll pick up the phone, call the trustee, and say that, look, your fund has gold and it's sitting at home. I want you to go to the shop and buy today's newspaper, right? And then throw the gold on top of the newspaper and take one photograph. And I want it within 1 hour, okay? So that I give him very less time to manipulate. Or the other way I want it is to go and stand in front of a calendar and take a picture, get someone to take a picture, and this is my mobile, send me your picture. So take your picture with the gold bullion you're holding in your hand, and I'll be happy that the gold bullion actually exists. I know it's a bit out of norm, but there is no other way other than you traveling to Perth, knocking on his door and saying, hey, I'm the auditor of your super fund, and where is the gold? I want to see it because I want to issue a, you know, an audit report. But if he lives in the next suburb, you can always phone him and say that, can you have it ready? I'll knock at your door and I'm going to look at the gold. If I don't see it in your hand, that means the fund doesn't own one. So this is really a funny one. So just, but you should do something. I mean, doing nothing is not the right thing to do. All right, so going forward, experts verification is an interesting one. And you should also look at the auditing standard 620, because reliability on the third party, first you should look at whether the person is really an expert or not. And there was this accountant, and you won't believe this. I was auditing a fund, and this accountant provided me an actuarial certificate. And this actuarial certificate was actually signed by a person who was studying actuarial studies. And and he was not a qualified actuary. So, first thing first, you have to check whether that person is still a registered actuary or not. Because a lot of actuaries, like a lot of accountants, like a lot of doctors, get deregistered. So you have to phone the Actuaries Institute and check whether that person who has signed the actuarial certificate is a registered actuary or not, because you don't know who you are trusting. So this is very, very important. And the second thing which is very important is the disclaimers which are on the actuarial report when they issue the exempt current pension income. And I've seen one which says that it is not to be trusted because the data is being entered by the accountant. So I am not responsible for that percentage. And I'm not happy as an auditor that an actuary has actually issued a disclaimer to the effect where he is not liable at all. So how much as an auditor can I trust and rely on that audit evidence? I think it's very, very low. So the next time when you look at the percentage provided, the accountant who has provided that percentage ECPI document to you, make sure you've read the disclaimer and you have understood the risk which you are getting yourself into. And it's very easy to calculate the ECPI yourself. And if you are using online SMSF audit, if you punch in the figures, it takes only less than 3 minutes to work out the actual percentage of exempt current pension income. And you don't even have to pay in online SMSF audit. You can simply check whether it is very close to it or not. And you won't believe this is a fact. uh, Most of the actuaries don't even look at what has been inputted. And I'm talking about actuaries who are very large firms. I don't want to name them because they can actually sue me. Because what happens is that it does not matter what time you apply, you get the certificate within 1 hour. So you could be applying for 48 hours continuously at different times if you have an office in Australia and if you have offices overseas. The actuary actually never sleeps. It's the machine which is issuing the actuarial certificates. So this means that the accountant can decide what percentage he wants on the actuarial certificate. So you have to be very careful on what was entered into the software, because it's very easy for the accountant to change the date. So if you're using BGL, if you change the date of contribution, it can affect the ECPI calculation and will give you a different percentage. So, as an auditor, I think it is your duty and your job to double check the actuary, the expert, the valuer, the real estate agent. And sometimes I've seen legal fees being paid out of the super fund. And that means red flags, because it's possible that there may be a tenant which have destroyed the property, maybe. So you need to talk to the solicitors yourself to check whether there is a case going on, whether the assets still exist or not. and it should be a direct communication. Any communication with the actuary, even for disclaimer, you as an auditor should write directly to the trustee and say, hey, you've written this disclaimer. Do you know that you issued an audit report? Did you check the accounts on when the contributions were made? How are you able to issue an actuarial certificate without verifying the bank statement of when the bank received the contribution for that member? So you have to be a little bit extra cautious while using the work of other experts. All right, now, who has obtained, you're auditing a fund, and who has obtained an actuarial certificate? What would you do? How do you audit? This is my question. Auditing a fund who has obtained an actuarial certificate, I never check ECPI, pension assets over non-pension assets because I trust the actuary. I do my own calculations, which is provided free by actuaries. If you log into the actuaries' websites, they have a form as well. You can simply enter the figures there and then check whether the figures match up or not. Because then you are checking the accountant whether he has entered the correct dates and the amounts. Look, I'm not saying that it could be intentional, it could be by mistake as well. All right, so I hope we are all having fun here. I have one more question about property valuation. Fund has one property, 80% of asset of the fund. What would you do? I'm happy with trustee valuation as it is very detailed. I insist on proper valuer to prepare a report each year, even if it costs $3,000 every year. When you buy an asset, usually for the first 3 years, I do not worry about valuation as it is an accumulation fund. If it's an accumulation fund, it doesn't matter much, but just watch out for the $3 million rule now. So it is possible that the member could be subject to Division 296 tax. So it's possible the valuation is quite high, and he may have bought the property just recently. And sometimes he might have bought the property from a related party using a very friendly valuer. So it's quite possible that the value of that asset could be 3 million or more at the time of purchase. Okay, so I can see here that most of you want a proper valuer every year, even if it costs $3,000. Let me tell you, you're going to get sacked. Because if you insist on $3,000 to be spent by the trustees every year, they're going to get rid of you. That's my opinion. But if I was auditing the fund, if the trustee does a very detailed valuation and I do my own work, a little bit work, check on core logic, check a few things, check at the rental return, uh, do some on street on Google, what the property looks like. Don't phone the tenant, that would be going too far. But looking at the lease, the rental lease, you looking at sold properties in real estate or realcommercial.com will help me as well. So I'll be happy with trust evaluation. But if there are a lot of fluctuations in property, then I can insist once in 5 years. So as an auditor, I do not agree with the 22 people out here. I usually would go with the 8 people out here where I'm happy with a detailed valuation. But then I'm not auditing your funds. You are the ones who are auditing your funds. Okay, this is somewhere you will get caught and lose your license. You have audited the fund, you've issued the audit report, but you cannot prove to the auditor that you have audited the fund, and that means you don't have any working papers. Now, I would like you to go through auditing standards 230 and the auditing explanatory statements 3100, and it will tell you that what you need and how you store these documents. They can be online, they could be a checklist, or it could be records of your testing and responses. You need to document everything, literally. If you check the bank account, you must write it down. I checked the bank account. If you check the dividend income, you have to write it. And on test. So remember, initially we said that if the super fund has 30 shares and you are going to check only 6 of them, you're going to write down which 6 you audited, all of 6 of them, and whether they were right or wrong, whether your investigation was correct or not. So you're going to check which one you checked and how you checked it. You went to the website or you did whatever you had to do, and then you're going to store those working papers. It's very important that they should be held safely, and they should be able to you should be able to access it. And the law is 10 years. So if you audited a fund 10 years back, you should still be holding the working papers, because the tax office can come and ask you to retrieve your audit documentation. Now you have to not only store your working papers, every audit evidence which you relied upon has to be stored. And let me tell you, if you have never been contacted by the tax office, I'll tell you what will happen. They will tell you they're going to audit you, they're going to give you the names of the 3 funds, and they're going to ask you for your audit file and all the audit evidence. And you send them that document, and you'll think that is over. Then they will ask you, and this is a tricky one, then they're going to ask you to sign a declaration that there is no other document you trusted upon. And these are the documents which you have supplied are the only documents you relied upon, and there is nothing else you relied upon to provide your audit conclusion. So this is where you think you're pretty smart and you've given them everything, and this is where they catch you, because they say that you told us that you've given us everything. How come now you are saying that you have this document, that document? We don't believe you anymore, because you gave a written statement by saying that there is nothing else to provide. So you have to be 100% sure. So by that time, you know that you are cornered, and you're gone. So uh, so just be very, very careful on what you hand over. And you can say that I return most of the documents to the trustees, because you don't store everything. Because if you say something like that, then you can always go back to the account, to the ATO, and say, look, this is the document which I have returned to the trustee, and I looked at it because my working papers has a note on it. So if your working papers have a proper indication of the bank statement, let's say on 30th of June, Commonwealth Bank account account number had $341.11. You don't need to have that bank statement, because you have documented it, that that is how much the money was in that bank account. Similarly, you don't need for those 6 dividend statements, you don't need those audit evidences, as long as you have the date it was paid, the amount of the payment, the amount it went into the bank account, and the amount of the franking credit. You don't have to store the dividend statements because you can return it to the trustees. You don't have to store everything as long as your audit documentation is complete. You don't have to keep tons and tons of paperwork with you. Now, when you store these documents, only those people who are authorized in your audit team, they should be able to look at it. And when you are considering issuing the audit report, you should have made notes, made proper notes on what you're relying and what you need to comment on, what to put in the management letter, what items you audit evidences you did not rely on because they were not to your expectations, and which ones you have doubt on. And based on that, you will write in the part A of the audit report on whether or not the financial statements can be relied, whether they are fair and whether they can be relied upon, and there is no misstatement in those documents. Okay, now your audit procedures should be so clear and so uniform that all these findings should follow through in your working papers. Now, let's just go to the end of it and I'm asking you a question. You do audits every year, and I document each and audit as below. I have a spreadsheet, and I've seen this. A lot of people, they don't want to spend an independent audit software. They use their own checklist. Every year they update their checklist. And these are the people who get deregistered. Um, uh, I have seen it happening again and again. I, in fact, know of an auditor. He used to work for an audit firm. In that audit firm, they used to use an audit software, and he used to work privately as well after hours, moonlighting on weekends. And when he was doing that, he did not want it to pay for the audit software. He would use his own spreadsheet. Unfortunately, that spreadsheet never got updated, and there were crucial things, change in legislation, which were affecting the fund. And as far as BGL is concerned, we just finished talking about independence. Your checking should be absolutely independent. Now, I know that BGL class are have integrated with other softwares to the extent where all the data which is in the accounting software flows through the audit software, and it populates as if you are the one who have audited that fund. But that is all wrong, because all you have done is you have imported the figures from an accounting software. You have not conducted your own independent audit, and that's the way you are going to get caught. Because if you have imported, let's say I am aware of an audit software, it brings in all the dividend statements from class, and it populates the working papers of the auditor, and the auditor claims that I've audited the fund. I'm sorry. As far as the ATO is concerned, you have not audited the fund, because you have relied on a accounting software which is controlled by the trustee or by the accountant. So just be very, very careful in how you proceed. Thank you. Thank you very much for staying with me. And I'm aware that I have gone a little bit over time. Uh, I can answer some questions if you have any, but if you don't, do email to me and I'll be happy to answer them to you privately. Uh, and next time, please make sure that you uh, log into Menti if you want a CPD certificate in audit. Thank you very much. Bye for now. I'll be closing this event for everyone. Just a reminder that the uh, handout will be downloaded, and it will be it'll be emailed to you, and it will be in on demand on SMSF School. You will be able to first of all, it will be emailed to you, and secondly, you will be able to download it from on demand webinars on SMSF School. Thank you very much. Bye for now.